Welcome back. You're watching us here on Bazaar Morning Call. It's a truncated week, but towards the end of the result season, a lot of stocks on our radar. Our research team standing by just for that. The list of top stocks for the day. First up, we go to Sudarshan. Sudarshan, Hero MotoCorp, decent numbers.
Morning, Mangalam. So Q2 FY25 earnings for Hero MotoCorp largely looks in line to slightly beat to our expectations. So the question is, what has helped the company report a healthy set of earnings? So the first is rural demand pickup. Company is a leader in the entry-level segment, and in the festive season of 32 days, company has seen double-digit growth for both urban and rural, but rural has done a little better than urban. And second, company continues to see an improvement in realization, and even from these levels, current levels, company sees a growth further in coming quarters. But at the same time, there are some concerns as well. First, company has been losing market share. Second, it lags in the premium level segment. And third, it has very limited EV profile. But coming to the outlook given by the company looks largely positive. It says it will maintain margin in the guided range of 14 to 16%. Even for Q2 FY25, if we look, it has come at 14.5%. And second, it will cover all price points for EV business by latest by early next year. And it's going to launch middleweight electric vehicle motorcycles in partnership with Zero Motorcycles. And the last is PLI benefits will start coming FY26. That will also aid in profitability. So overall, it looks good. And that's the reason I'm going with green for Hero MotoCorp for today.
All right, thanks a lot for that, Sudarshan. Well, I'm looking at Grasim, and for Grasim, we already have bulk of the consolidated numbers via the ownership that they have in Ultratech Cement. But the businesses that we look out for is the CSF business as well as the chemicals business. And both those two businesses, the EBITDA number that they delivered was much lower than what Jefferies put up. A couple of reasons. Lower than expected EBITDA in the chemicals business, and also in the new businesses, there was a loss, that they reported, and that was higher than what the street was working with. So the VSF business, or in the CSF business, because we call it CSF since it has it has VSF as well as a couple of other segments in that. Out there, the EBITDA growth was close to 6%, but the street wanted more out there. And in the chemicals business, the growth was close to around 16%. The bright spot, though, comes in the paints business. So though they continue to report losses out there, the paints business revenue number has scaled up to around 440 crores odd, and the street will like this. But because of the capex they're incurring both in the paints as well as other businesses, the net debt number as well has ballooned up. So the read-through is that the paints business is doing fairly well and at par with what they were expecting to do. But the other businesses are fairly volatile. So given the losses that we're seeing in the paints business and the volatility in the other businesses, Jefferies has revised their target price a little bit downwards, and Kotak as well, they maintain their reduced rating with the target price of 2,435. Starts in the red, and then we'll have to see whether or not there's a recovery in store. But let's hop across to Vinny. She's here to track Glenmark Pharma. Vinny?
So for Glenmark Pharma, decent good set of numbers that's coming from the company. They've reported a growth of around 7.6% in terms of revenues. Margins have seen a good expansion, 16.7% versus 13% last year. And profits are also seeing a good growth, but do not forget that there was an exceptional loss last time, the same period, of around 325 crores due to the stake sale in Glenmark Life. But even after you adjust that, the profit is seeing a very good growth. So this time the profits are at 354 crores. What is leading to the good growth? One, India business that's seen a strong growth of around 13.9%. Europe business a growth of around 14.6%. And specifically in India business, they've sustained higher growth in the cardiac as well as dermatology therapy areas, which is helping the growth momentum grow further. They're expecting that to be the growth driver going forward. So interesting move coming in from Glenmark Pharma in terms of numbers. We're expecting a green on the screen. They maintain the margin guidance of around 19% and a revenue of around 13,500 to 14,000 crores by the end of this year.
Okay, all right, Vinny, thank you very much for that. Muthoot Finance is going to be in focus as well. Sudarshan is going to tell us today about what the Muthoot numbers look like. So good morning.
Morning, Prashant. So as far as earnings are concerned, earnings were largely in line, but good part is company has raised FY25 loan growth guidance to 25% versus earlier guidance of 15%. Talking about the good part, first, both overall asset under management and gold asset under management have increased almost 30% year-on-year and almost 7% sequentially. NI has also seen a growth of more than 35%, and even NIM, that is net interest margin, has seen a growth both sequentially and year-on-year. But what's the bad part is the asset quality. it has sharply deteriorated. Gross NPA has increased 32 basis points and net NPA has increased 20 basis points sequentially. And also MFI business, like other companies, for Muthoot Finance also MFI business remains a pain. First, profit has come down by 37%, and second, gross NPA has increased to 3.51% versus 2.36% sequentially. So at least to start with, I'm going with green for Muthoot Finance because of the revision in the growth guidance. But people have to factor in that the revision was almost like kind of known, but it might be a little bit more than the people's expectations.
Thanks a lot for that, Sudarshan. Mangalam, what about Honasa? Numbers quite weak?
Numbers quite weak. It may well be the stock of the day on the downside. And why do I say that? Because there are three reasons why numbers are weak. One, there is underlying weakness in the consumer sentiment. Secondly, there is disruption due to the distribution model change of the company. So that distribution losses have been higher than what the company anticipated. And the third one, the mainstay of the company, which is Mamaearth, growth is slower than expectation. So you have a distribution-related challenge, consumer environment-related challenge, and your key product not doing particularly well. What is the result of that? Revenue is down by about 7%. The EBITDA, which was a profit of 40 crores same time last quarter, is now down to a loss of 31 crores. And as a result of which, on the bottom line, you've reported a loss of 18.5 crores versus a profit of 30 crores itself. Three reasons why Mamaearth is not doing too well. There is a wave of consumer preference towards active ingredient-based products. Investment allocation models as per the company haven't evolved for an offline-based brand, and they need to refresh brand mix across product, price and communication. Let's see, for the next few quarters, it seems like all bets may be off from Honasa, and that's what all the brokerages are saying.
Okay, all right, Mangalam, thanks for that. Well, let's hop across to Upasana, who's here to tell us about Crompton. Upasana?
Good morning. Well, the company's reported a good set of numbers. The beat was mainly led by company's healthy ECD growth and butterfly margin expansion. Now, coming to company's ECD segment, it has reported a strong growth of 12.5% on the back of strong appliances and pumps growth. Now, EBITDA margins were also boosted this quarter, mainly because of strong margin expansion in butterfly, as stated earlier. And even ECD segment, the margins remained quite steady across the appliances. Now, coming to the company's numbers, revenue stood at 1,896 crores with an uptick of 6% on a YoY basis. Gross margins also expanded by 170 basis points, likely due to the price hikes for fans. And EBITDA margins stood at 10.7% with an uptick of 90 basis points, while we were working with a poll of 10%, so much above that. PAT stood at 128 crores with an uptick of 27% on a YoY basis. So all in all, good set of numbers reported by Crompton in its Q2 FY25.
All right, good set coming in from Crompton. We'll hear from the management shortly on the show as well. The CFO joins in. Let's talk about Delhivery and FirstCry. For Delhivery, it was a decent quarter. Revenue growth was about 12.8% year on year. The company reported an EBITDA gain versus an EBITDA loss, and that's a positive. The bottom line, of course, was aided by them having changed their depreciation policy last quarter. So that continues 2 quarters in a row. The company is PAT positive. EBITDA profitability is something that, is fairly good. The street will take note of that. The PTL business saw revenue growth of almost 27%, and the express parcel volumes came in at around 2.5%. The other one is Brainbeast, or as you call it, FirstCry. That may well be the stock on the way up in today's trading session. Why is that? Because the company's turned EBITDA positive versus an EBITDA loss on the back of a 26% revenue growth. Margins are at 3%. Of course, the company's been guiding for margins to improve. The cash net profit has actually increased by about 209% at around 28 crores. And the driver for them has been the acquisition Global Beast, which is up around 55% in terms of revenue, and the EBIT has actually jumped by 156%. So good performance coming in from FirstCry. Expect that stock to do extremely well today.
Okay, well, we are back to talking, Mangalam, thanks very much for that. We're back to talking about city gas distribution companies, and the news is not getting any better. There is further sort of cut in allocation as far as gas supplies are concerned. Sonal is here to explain what has happened. Sonal, good morning.
Good morning, Prashant. Well, it's surprising, right? This was not something which was expected by the street. It's the second month in a row when the government has gone ahead, cut allocation of domestic gas to city gas distribution companies by 20%. And this takes the APM gas availability for city gas distribution companies to around 40 to 45%. This was around 70% last month itself. Now, Jeffrey says that they expect now APM gas allocation in the middle of 2025 to be cut to nil. So there'll be no gas availability from domestic fields now. They've lowered FY26 EPS for Mahanagar Gas by 31%, IGL by 27%, Gujarat Gas by 19%, and they've also downgraded IGL and MGL from their respective ratings that are there currently. So big downgrade coming in there. JP Morgan has downgraded MGL to a neutral. Target price has been cut to 1300. Downgraded IGL to an underweight as well. And CLSA says that this could imply a 30 to 35% cut in their unit EBITDA if they do not go ahead and increase prices, which are expected to be around 10%. But considering the state elections, there's a possibility it could not be as much as 10%. So definite hit on EBITDA is something which is expected.
Thanks for that, Sonal. Well, I'm looking at the aluminium producers, and I'll look at Nalco, Vedanta, and Hindalco in that order. The reason is LME prices were up more than 5% on Friday. The key reason for this spike was that China announced withdrawing export tax rebate for aluminium as well as copper products effective December 2024. This rebate on exports of aluminium as well as copper in China was approximately 13% earlier. Now, China's aluminium exports, they have been surging up. In this year itself, it's up more than 15% on a year-on-year basis for the first 10 months. And by the end of this year, it could very well be around 6.6 million tons. Now, Chinese aluminium exports, going by that number of around 6.6 million tons, represents close to around 15 to 16% of China's aluminium production and around 20 to 22% of production outside China. Aluminium exports from China are expected to decline from December 2024. So that's what will support LME aluminium prices as well. In this sort of a backdrop, we'll keep an eye out on Nalco, as well as Vedanta, as well as Hindalco in that order. Well, let's do a quick recap then of all the top stocks we just discussed for you. Let's run you through the ones with positive news flow. Hero MotoCorp, Glenmark, Muthoot, Brainbees, Crompton, Delhivery, and the aluminium makers which I just spotted. We have negative news flow though on a couple of stocks. Grasim, because the standalone business was disappointing. Honasa, Mangla mentioned, could be the stock of the day, and city gas companies as well. So that's about all the equity market action. But for the time being, let's tell you what's going on in the commodities market. Manisha Gupta joins us to help us out with just that. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, aluminum you just spoke about, but the China tax rebate, removing of that is, has supported other metals as well in sense of a spillover effect. So whether it is about copper, where we are looking at some support continuing into the market, it also is zinc, which has started opening on a slightly stronger note. But the other metals have continued to be under pressure. If you look at nickel, we've seen 10% of decline in past 1 month. That is trading at a 4-year lows. And then the steel prices are trading at a 2-month lows as well, with China production at 81.9 million tons for the month of October, and exports at the second highest on record continue to put steel prices under pressure. But we are looking at a smart rebound also in case of gold and silver. Well, silver did put in 4th weekly decline, and gold put in a worst week since 2021 June, falling by nearly 3 to 5%. But today we've started some support into that one as well. And then crude also, after declining 4% in the previous week, has seen a nearly a 1% of a jump right now. So in Asia markets right now, most of these commodities are trading in the positive.
Okay, all right. Thanks a lot for that, Manisha. Well, let's